Welcome, dear traders. Today, Asian stock markets have extended losses due to a massive sell-off. It appears market fears about economic prospects are mounting again, especially after the US job openings data revealed yesterday. On the top of that, the economic conditions of many Asian economies are also raising alarm bells. However, there are some reasons for optimism as well, which I will review and find out more details. Let's get cracking. Currently, the probability of a 75 basis point rate hike by the Fed on September 21 is slightly less than 70%. After Jerome Powell's testimony last Friday, several other Fed policymakers delivered speeches. They all backed aggressive tightening to cap soaring inflation. President of the New York Fed, John Williams, stressed that the Fed's main priority is to take control of inflation, and he believes that it will take a few years to get inflation back to 2%. President of the Richmond Fed Thomas Barkin said yesterday that the US faced post-war-like inflation. He also noted that the US economy is not heading for a recession. Atlanta Fed President Raphael Bostic expressed the same view. Economic prospects are cloudy, while inflation is still high. However, the labor market remains strong. Yet the latest labor market report was not so positive, and the number of job openings in July exceeded 11.2 million. This is almost twice the number of available jobs. It's signaling a significant shortage of workers in the labor market. As for the Nonfarm Payrolls report on Friday, the government expects the figures to be slightly weaker. The FOMC meeting will be held on September 21. The Nonfarm Payrolls report is on tap on September 2, while the CPI data is due on September 13. The Fed is sure to take notice of these reports when making monetary policy decisions. The European Union is going to unveil its inflation report today. It will certainly affect the US dollar and the euro. The US dollar index is now trading slightly below a 20-year high of 109.48 versus its rivals. And this level was reached on a Monday. The greenback has been growing for the third month in a row. It gained by about 2.7% in August. In the Asian session, it was steadily moving in the sideways channel, trading at 108.96. The US currency is likely to remain in the sideways corridor until the release of the Nonfarm Payrolls report on Friday. However, it may also regain ground amid hawkish comments of Fed members. The US dollar looks more stable today, trading in the upward range of 108.51 and 108.92. While the US dollar is down and investors are mulling over the future plans of the Fed and the ECB, Japan has scored a small victory. Industrial production in the country unexpectedly increased by 1% in July versus the forecast reading of 0.5%. Retail sales also turned out to be better than anticipated. They rose by 2.4% in annual terms, logging an impressive increase in July after 1.5% a month earlier. Today, the comments of a Bank of Japan board member Yanko Nakagawa were revealed. He said that the current stance had proved to be effective. We must continue with the monetary easing to sustainably and stably achieve our inflation target, he said. Moreover, the Bank of Japan reckons that inflation above 2% is temporary. Consumer prices in Japan are not growing as fast as the cost of commodities. In addition, imports are getting more expensive on a weak yen. And today, the yen has finally asserted strength against the US dollar. In the Asian session, the dollar-yen pair was trading at 138.72. And the yen is gaining momentum amid the consolidation of the greenback in the sideways channel and the drop in the US bond yields. Apart from that, the Japanese currency usually climbs higher thanks to the Bank of Japan's comments on the monetary policy. The pair was moving in the range of 138.05 and 139.07. The Aussie has also climbed today. Traders seem to have ignored China's downbeat report, and the manufacturing PMI index declined in August, dampening hopes for a recovery in the economy of Australia's main trading partner and the world's largest exporter of goods. Iron ore prices in China dropped as well. Analysts believe that macroeconomic indicators and changes in the trade conditions are getting more positive for Australia. They will provide significant support to the country's economy in the future. Apart from that, the Reserve Bank of Australia will announce its key rate decision on September 6. Analysts are certain that the regulator will raise the interest rate by 50 basis points for the fourth time in a row. Therefore, the Australian dollar is growing amid expectations of a rate increase. As a commodity currency, it lifted up amid a slight rise in oil prices. In the Asian session, the USD pair was hovering in the range of 0.6851 and 0.6906. At the time of preparing material for this video, it was trading at 0.6872. And that's all for now. Wednesday is going to be rather eventful. Some EU states will publish their GDP figures and other economic reports. The US has already unveiled the ADP employment change report, which may also affect market sentiment. Subscribe to our channel and stay up to date with the latest market news. See you soon.